Okay. Good morning, friends. Good morning, friends. Okay, let's continue with our discussion. In the last session, I had started with relevant costing. So maybe I'll just summarize what we did in the previous session. We started with an area called as what is relevant cost. A relevant cost is basically something which is relevant to the decision being taken. It should vary between the alternative course of action. What is alternative course of action is, if you go ahead with the work and if you don't go ahead with the work, what happens in a yes scenario and what happens in a no scenario. Technically, relevant cost is the difference between yes scenario and no scenario. There are multiple rules associated with it, but the broader rule is what is the difference between the yes scenario and no scenario becomes the relevant cost. We started with relevant cost of material. There the first question I ask myself is the material in stock or out of stock? Out of stock, relevant cost is equal to replacement cost. If it is in stock, then I ask whether it is fast moving material or it is a slow moving material. Fast moving, relevant cost again becomes replacement cost. Slow moving, can you sell it? Relevant cost resale value. Can you use it as a substitute? Relevant cost of the substitute. Can you do both? Higher of the two options. Then we saw relevant cost of labor. Again, the first question is the labor available? Not available. Not available, relevant cost is equal to wages payable plus some extra cost you may incur, something like training cost, recruitment cost, if at all you are incurring some extra cost. And if labor is available, we check whether he is busy or idle. If he is busy, then the next question is, can he be substituted or he cannot be substituted? If you can bring a substitute person, cost of the substitute is the relevant cost. If you cannot bring a substitute person, lost contribution plus wages payable. Lost contribution plus wages payable. In that, your wages payable will have to be added back if while calculating contribution by mistake you have subtracted it, and generally we would have subtracted it. If the problem specifies that it was not subtracted, then no need to add it back, but general norm is it would have been subtracted, so you will have to add it back. You will have to add it back, lost contribution plus wages payable. And in case if it is a idle person, we check whether can he be terminated or he cannot be terminated. If you can terminate the person, relevant cost is wages payable. If you cannot terminate, relevant cost is 0 because it's a committed cost. Okay, in the past session I was just initially when I had started, I said theory is extremely critical. Just an information, yesterday's paper had 75 marks of theory, 50 marks of practical. That was the mix which had in the previous paper. I don't expect the mix to be that, but anyway it will be a 50-50 mix. So the recent paper had 75 marks of theory and 50 marks of practical. Students did not find it that difficult, whoever had focused on a balanced view. That is, whoever has focused on theory as well as the practical area, they did not find it difficult. I could see many students were happy with the paper, but there are a set of students who don't focus on theory because they feel costing is a practical paper and they end up struggling there. That is where the bigger problem is. Okay, let's continue with relevant costing. We'll have some new concepts which will keep coming in. Let's come to question 19. Intervero Limited, a small engineering company, operates a job order costing system. It has been invited to tender for a comparatively large job which is outside the range of its normal activity, and since there is surplus capacity, management is keen to quote as low a price as possible. It is decided that the opportunity should be treated in isolation without any regard to the possibility of it leading to any further work. A low price will not have any repercussions on its regular work. The estimating department has spent 100 hours on work in connection with the quotation and they have incurred travelling expense of 550. Following is the cost estimate prepared by the estimating department. Direct material, 2000 units of A, 200 units of B, other material and components, direct labor, 700 hours of skilled labor, 1500 hours of unskilled labor, overhead department P, department Q, estimating department, travelling department, all put together the estimate is 85,500. Following additional information is there. Material A is a regular stock item. Stock holding is more than sufficient for this job. The material currently held has an average cost of 25, but the current replacement cost is 20. Material B, stock of 4000 is currently held in the store. Slow moving, it's a residue of the batch bought 7 years ago. It currently costs 24, but the resale value is only 18. A foreman has pointed out that it could be used as a substitute for another type of regularly used raw material. Direct labor, the workforce is paid on a time basis. Company has adopted no redundancy policy, which means that skilled laborers are frequently moved to jobs which do not make proper use of their skill. Wages included in the cost estimate is for the job which ideally require. It seems likely that if job is obtained, most of 20 to 100 hours of direct labor will be performed by skilled staff receiving 3.5 per hour. Overhead department P working at full capacity, profit center uses a transfer price of 25 per hour for charging the processing time. Estimated variable cost, fixed departmental overhead, departmental profit. P's facilities are frequently hired out to other firms and a charge of 30 per hour is made. Overhead department Q, transfer price of 20, which is broken down into estimated variable cost of 8, fixed departmental overhead of 9, departmental profit of 3. Estimating department, the department charge out its time to specific job using a rate of 5 per hour. Average rate is 2.5, but the higher rate is justified to cover departmental overheads and the work done on unsuccessful quotation. Planning department, the department also uses a charging out rate which is intended to cover all departmental costs. Offer received is 70,000. You are required to restate the cost estimate by using an opportunity cost approach. Make any assumption that you may deem necessary and briefly justify each of the figures that you give. Please go through the question quickly. Okay. Okay, the cost estimate is already prepared by the company and it said the cost is going to be 85,500. The only issue is whether they have done the right calculation or not is a question mark. Is 85,500 the right number or not is something we are required to analyze. The contract is coming for a price of 70,000. So if you just go by your traditional method, you will have to reject this offer because your costing says 85,500. The offer received for the contract is only 70,000. Whatever you learnt on relevant cost of material and labor will continue in this question. On top of that, some extra things you will learn. Something called as how do you take the relevant cost of an item like in-house consumption. All of that you will understand in this question. Let's start. They have said, make any assumptions that you may deem to be necessary and briefly justify each of the figures. If they give something like briefly justify each of the figures, you will have to write an explanation on each of the adjustment. Maybe a small explanation would also do, but an explanation is expected in the exam solution as to why you are including it or why you are excluding it. Either ways, you may want to include it or you may want to exclude it. Let's start. Relevant cost statement of Enquiry 205 H81 of Enquiry 205 H81, particulars calculation amount. Okay, we start with the first item, material A. Material A. I need 2000 units of material A. There is some extra explanation available. That extra explanation will let you know what is the relevant cost. How much is the relevant cost of material A? 20 per unit or rupees 40,000, because it's a regular stock item. So right here, regular use hyphen replacement cost. I am just writing a brief explanation like this. Obviously, in an exam scenario, if they ask you to justify, you will say material A is in stock, it's a regular used item, hence the relevant cost is replacement cost. I've just written 2 points, but basically you will have to expand that. Relevant cost, regular use replacement cost. Regular use replacement cost, maybe you will have to write 2 lines with these 2 points. Regular use replacement cost 40,000. Material A, regular use replacement cost 40,000. Regular use replacement cost 40,000. Coming to material B, I need some 200 units of B. 4,000 units is currently in stock, so it is in stock portion. It's a slow moving item. It's a slow moving item. I'll again explain the slow moving part because one of you had asked me a doubt, so let me touch upon this. In case of a slow moving item, if both options are available, the relevant cost is higher of the two. The confusion is, why is it higher of the two? The reason is simple. See, ignore relevant costing. Let's look at what will you do with this material B. Ignore relevant costing. Please ignore relevant costing. This is a slow moving item. So, slow moving item, I need to put this for some use. It was bought 7 years ago at a cost of 10 per unit. Least bother about at what price did they buy, because it was bought 7 years ago and that price is irrelevant at this point of time. B currently costs 24 per unit. Again an irrelevant information because I am not planning to buy it. I am not planning to buy this material. I can sell it for 18. So, one option I have is sell it for 18. Second option I have is use it as a substitute and save 20 rupees. Use it as a substitute and save 20 rupees. You have 2 options, sell it for 18 rupees or use it as a substitute and save 20 rupees. You need to see what option would you have taken. What option will you take? And relevant cost is the opportunity cost. What is opportunity cost? What are you losing? I am not losing the option of selling at 18. I am losing the opportunity of using it as a substitute for 20 rupees, because what I would have done, I would have used it as a substitute rather than selling it. So, you will have to check what were you planning to do. So, my plan would have been to use it as a substitute and save 20 rupees for the company. Use it as a substitute. That material B, when I look at it, looks to me at a worth of 20 rupees. If it was out of stock, I would have bought it at 24. So, that time the relevant cost is different. You have in your hand at this point of time, either sell it for 18 rupees or use it as a substitute and save 20 rupees. Logically, what I will do is I will use it as a substitute. Logically, I will use it as a substitute. So, relevant cost is what you are losing. What you are losing? You are losing the opportunity of using it as a substitute. You are losing the opportunity of using it as a substitute. Slow moving, higher of resale value and cost of substitute. Higher of resale value and cost of substitute. Slow moving, higher of resale value and cost of substitute. And cost of substitute. Detailed explanation as to how to write and all, it's there in the material, but I am just writing a brief explanation. 2000 into 20 rupees, sorry, 200 into 20 rupees. 200 into 20 rupees. Higher of resale value and cost of substitute. Resale value and cost of substitute. Other material. Other material. Other material. They have not given any explanation on top of that. They have just mentioned to be bought. So, to be bought replacement cost. To be bought replacement cost. If you are yet to buy it, the relevant cost is replacement cost. I don't have any extra explanation in the question. So, I assume whatever they have given is the replacement cost. There is no extra explanation on this item. To be bought is very clear. So, 12,500, no extra explanation on this item. Other material, to be bought, relevant cost is replacement cost. Relevant cost is replacement cost, 12,500. 12,500. Direct labor, read that extra note and let me know. Direct labor, there is some extra note which explains what needs to be done. Direct labor, there is an extra note which will tell you which scenario do the labor fit in and what is the relevant cost. No, no redundancy doesn't mean no idle time. No redundancy doesn't mean no idle time. I cannot remove them basically. I cannot make them redundant or I cannot remove them from the company. They are moved from job to job depending on their skill. That is because, see, the no redundancy policy indirectly tells me that whether I have work or I don't have work, I cannot remove these people from the company. On top of that, they are moved from job to job which do not make proper use of the skills. Basically moved from job to job indirectly indicates that I do have a lot of people. Paid on time basis indicates that amount of time they are in the factory, I'll have to pay them. Amount of time they are in the factory, I'll have to pay them. Whether they are working, not working doesn't really matter. There's another scenario called as workforce is paid on piece basis. Piece basis means if you work, you will get money. If you don't work, you will not get money. Here is paid on time basis. So, I come to Bharadwaj Institute, I stand here whether I take classes or I don't take classes, Bharadwaj Institute has to pay me. The other way is where I take classes, they say the amount of time you take classes will pay you. So, here they are paid on time basis. The person comes and sits in the factory, he will be paid money. You cannot make him redundant. On top of that, you keep moving him from job to job, and like finally they say the major work would be done by the people who are getting that 3.5, which is your skilled labor. The entire work would be done by the skilled labor. Maybe I have more of skilled labor in the company. Maybe I have more of skilled labor in the company. It is available, idle and cannot be terminated. Available, idle and cannot be terminated. That's the scenario. There's no assumption also cannot be terminated. This is clearly given in the question. So, you can write available, idle and cannot be terminated. Available, idle and cannot be terminated. Cannot be terminated, 0. Labor force is available, they are currently idle and you cannot terminate them. You cannot terminate them. So, relevant cost becomes 0. Okay. Before I explain department P and Q, I'll explain a concept and then you go to the department P and Q. Now, many a times what organizations would do is, they will use the in-house department for their work. For example, let's assume you are doing an audit for another company and you need the expertise of the tax team for that assignment. So, you will use the services of the tax team and do the tax part work and then tell the team to move out. So, sometimes you will use your in-house department for any work which you need. So, here I need to use the services of department P and department Q. They are within the company. Question will give an information called as transfer price, which you learn in a transfer pricing chapter, but it's highly irrelevant. That number is irrelevant. Transfer price is basically the price which one department charges to another department within the company. That's a price which one department is going to charge to another department. It's neither the revenue of the company nor the expense of the company. One department will say it's their revenue, another department will say it's their expenditure. When you consolidate both the departments, you will end up knocking off that item. So, there will be a transfer price given in the question. That's highly irrelevant number. Let's not even look into that. Now, the departments would be of two categories: outside demand and no outside demand. There are departments which will have outside demand and there are departments which will not have outside demand. Outside demand, now if you don't have any outside demand, what happens is, this department is within the company. It does not have any outside demand. When I want to use the services of this department, if you look at yes and no scenario, what will happen is, department or that whatever the department will work will be idle in this side. It will work, it will be idle in the other side because it does not have any outside demand. If you don't have outside demand, whenever an in-house demand come, it will work. Whenever in-house demand is not there, it will sit idle. It will do nothing. Here you will incur variable cost as well as fixed cost. When you are working, you will incur variable cost. Whether you are working or not working, you will continue to incur fixed cost. Whether you are working or not working, fixed cost will continue to be incurred. This side you will incur only fixed cost. In short, fixed cost is irrelevant. No outside demand, the relevant cost is variable cost per hour. No outside demand, the relevant cost is variable cost per hour. Whatever is the variable cost of that department, that is what is relevant. The question will give you variable cost, fixed cost, transfer price, profit, lot of things would be given in the question. I am least bothered about any of them. If you don't have outside demand, the only extra cost I incur is variable cost. Another scenario is it has outside demand. So, what happens is, yes, no. Yes means use for project. No means sell it outside. You are planning to sell it for outside. The revenue you earn is, in this side I don't write any revenue. In the S scenario we don't write any revenue. S side the revenue is 70,000 all put together. It's material A, material B, other components, all adjustments put together, you will get an amount called as 70,000. So, you don't write a separate revenue or anything, all put together, a single amount will come later on. So, in this side revenue is not there. This side let's assume you are earning 100 rupees. You are earning a revenue of 100 rupees. I am writing it in bracket, okay. Revenue is in bracket. Variable cost. If you are using for your internal use, you will incur a variable cost of 40 rupees. This side also will be 40. Sometimes this side can be 50 or 60 or 30 or 20. The question can give a different number also, saying that when you sell it outside, your variable cost is 25 rupees. But when you are using it in-house, the variable cost is 20 or 30 or 40. They can give a different number as well. The variable cost can be different. As of now, I am taking a variable cost this side of, let's just take number of 50 rupees. This side it is 50 rupees. The variable cost is 50. Fixed cost 10, 10. Both the sides 10 and 10. Unless the question tells you otherwise and give you some relevant fixed cost is mostly irrelevant. Yes scenario, my cost is 50. No scenario, my total is negative 40. No scenario, the total is negative 40. Minus 100 plus 50 plus 10, negative 40. Relevant cost is 50 minus of minus 40. 50 minus of minus 40, which is 90 rupees. which is 90 rupees. In short, the relevant cost is lost revenue. Relevant cost is lost revenue plus or minus change in variable cost. Lost revenue plus or minus, why it is plus or minus I will explain. Lost revenue plus or minus change in variable cost. Sometimes your variable cost for internal use would be more than the external use. Then you will have to add the variable cost because you are incurring extra costs. Sometimes the variable cost would be lesser, you will have to subtract it. For example, if this side it was 60, if this side it was 60, 70 minus of minus 40 would have become 110, which is nothing but 100 rupees plus extra 10 rupees of variable cost. Lost revenue plus or minus change in variable cost. If you are incurring extra variable cost, add it. If you are incurring lesser variable cost, subtract it. If you are incurring lesser variable cost, subtract it. Net net, imagine the yes and no scenario, that's all. Net net, it is the same thing. You will have to imagine the yes and no scenario and do it. Lost revenue plus or minus change in variable cost. Lost revenue plus or minus change in variable cost. That's the number which will give you this solution. So here, if you have outside demand, the relevant cost is lost revenue plus or minus change in variable cost. In this question, I think you may need some extra 10 lines or so. After that, now write relevant cost of captive consumption. Relevant cost of captive consumption. Captive consumption is internal use. Relevant cost of captive consumption split into two. Relevant cost of captive consumption has outside demand, other side no outside demand. Has outside demand, no outside demand. Has outside demand, put arrow mark down. Lost revenue plus or minus change in variable cost. Lost revenue plus or minus change in variable cost. Lost revenue plus or minus change in variable cost. Plus or minus change in variable cost. Other side no outside demand. Variable cost. Variable cost. Okay. So I have given the breakup like this. Let's assume I have outside demand. I have outside demand and I also have idle capacity. I have outside demand and also I have idle capacity. It will go under the category of no outside demand. It will go under the category of no outside demand, because what I am looking at is the amount of time I am planning to use. Is there outside demand for that amount of time? Is there an outside demand? For example, the tax team does outside work, but there are a lot of people who are sitting idle. There are a lot of people who are sitting idle in the tax team. Then if you are using the services of the tax team, the relevant cost is only the variable cost. The relevant cost is only the variable cost. If you have outside demand and you are working at full capacity, you have outside demand and you are working, in short, you need to check what are you losing. What are you losing? If I use the services of department P and department Q, do I lose the opportunity of selling outside? If you lose the opportunity of selling outside, lost revenue plus or minus change in variable cost. If you are not losing the opportunity of selling outside, the relevant cost is only variable cost. So let's write department P. Department P. Now the explanation says it is a department of Intervero Limited that's working at full capacity. So first point they have mentioned clearly, it is working at full capacity. It's treated as a profit center, uses a transfer price of 25 per hour. Least bother about the transfer price number. That's just their internal calculation. Estimated variable cost 10 rupees. That's an information which is good to know. Variable cost is 10 rupees. Fixed department overhead is 8. Department profit is 7. Least bother about these two numbers. It is frequently hired out to other firms and a charge of 30 per hour is made. there is a steady demand from outside customer for the use of these facility. Question has nowhere mentioned anything on change in variable cost. It has not mentioned that for internal use it is 10 rupees, for external use it's 12 rupees, 15 rupees, nothing like that has been mentioned in the question. So it's basically lost revenue. Plus or minus change in variable cost is 0. Plus or minus change in variable cost is 0. Has outside demand, has outside demand, has outside demand, operating at full capacity, has outside demand, operating at full capacity, relevant cost is lost revenue, plus or minus change in variable cost, plus or minus change in variable cost. Plus or minus change in variable cost. It will be plus or minus change in variable cost. So here there is no change in variable cost as such. So the lost revenue is how much per hour? 30. And we are planning to use 200 hours. So 200 into 30. 200 into 30. Department P 200 into 30. Then you have Department Q. Department Q. Look at the extra explanation there. Department Q uses a transfer price of 20 for charging out machine processing time. Charge is calculated as under. No extra data saying that whether it has full capacity, not full capacity, has outside demand, doesn't have outside demand. So assumption is no outside demand. Relevant cost is variable cost. No outside demand. Relevant cost is variable cost. No outside demand. Relevant cost is equal to variable cost. Variable cost is 8 rupees. Sorry, yeah, variable cost is 8 rupees. Now, see, a question can make it more complicated. Wherever a lot of complication is there, you'll have to imagine the yes and no scenario. They can say Department Q doesn't have any outside demand and all. But in case we take up the contract, this department will not be able to work on another contract which makes a profit of some 15,000, 20,000, something they'll give. So the relevant cost is whatever is the opportunity lost. Relevant cost is whatever is the opportunity lost. As of now, I don't have any information. So it technically means I have sufficient capacity. I have sufficient capacity. Sometimes what can happen is the question can say that this department, if it works on this contract, you will have to say no to some other contract which has come, some other inquiry which has come. That inquiry is likely to give a profit of some 4,000, 5,000 rupees. So that's technically the loss for the company. Estimating department. Think and let me know how much. There is also internal department. Estimating department. Internal. This is internal department to the company. Technically like captive consumption. Estimating, traveling. You write all the three, we'll discuss in a minute. Traveling and planning department. Please write a number, right, wrong, you can change it later. Estimating, traveling and planning. It is like captive consumption. Think about it and do. estimating, traveling and planning. How much? Okay, 250. 100 hours into 2.5. Okay. Which one? Traveling is estimating 250. Everyone is getting a 250 answer. Is everyone getting a 250 answer? Anyone has a different view? Why irrelevant?
It's already spent.
Estimating is 0. This inquiry was prepared after the estimating department has spent the time. The estimating department had only prepared this inquiry, this table which you see, 85,500. This is after the work done by the estimation department. The estimating department has spent 100 hours on connection with the quotation. Accept the contract, amount is spent. Not accept the contract, amount is spent. So it is captive consumption, I do agree to it, but it's already incurred by the company. It's already incurred by the company. So estimating department sunk cost 0. Traveling expenses sunk cost 0. Traveling expenses is also already spent. Traveling expenses also already spent. I'll be happy if you have made a mistake, you correct it with a different pen so that you understand it better. It doesn't really matter whether you are making mistakes here. Estimating department 0. Traveling expenses will also be 0 because somewhere it said it has already spent some 550 rupees, has incurred a traveling expense of 550 in connection with the visit to the prospective customer's factory. Think about the planning department and let me know. Planning department, there's no extra explanation there. So how much is the relevant cost? Relevant cost of the planning department. You let me know a number. See, right, wrong doesn't really matter. So if you make a mistake, you understand it better. You don't make a mistake, you'll also think about different views because different people may get different answers. So somewhere you'll appreciate different views, different doubts which you will get. So what? Planning is also 0 because your estimation, planning, budgeting, all of that would have been prepared before this table is prepared by them. So planning is also technically 0 unless they make it clear saying that you need to do some extra planning something now onwards, maybe another 50 hours will have to be spent. There also I need an extra explanation that 5 per hour, is it a variable cost or is it a fixed cost? Because your 5 per hour can technically be even a fixed cost because in your inter you would have learnt an overhead absorption rate which is budgeted overheads by the budgeted number of hours. So in that calculation even your fixed overheads were considered. So if this 5 per hour is technically fixed cost, whether incurred not incurred it would be irrelevant. If it's a variable cost, if it's already incurred, again it is irrelevant. So understanding is planning is something which would have been already done by the company. The planning expenses would have been incurred by the company. So again sunk cost 0. Sunk cost is 0. Total relevant cost. Total relevant cost 65,700. Total relevant cost is 65,700. And I have got an offer. I don't think so. The question has asked us to accept or reject an offer. They just said you are required to restate the cost using an opportunity cost approach. We have done. Technically, if I have to make a decision, I'll go ahead with this contract. I'll go ahead with this contract because I've received an offer for 70,000. Earlier I was thinking of rejecting it. Now I think I should accept this. Because the offer received is for 70,000. My cost calculation says 65,700. Okay, I did all of this. I went to the managing director. The problem is over, but a theory oriented question which gets clubbed mostly in these type of question. I went to the managing director and told him all of this. He says still we will not accept it. Still we will not accept the contract because he feels there are 2-3 issues with relevant costing. Despite the statement clearly telling you that opportunity cost is only 65,700, your revenue is 70,000. I still don't want to accept the contract. 2-3 reasons for that, right? First reason, issues with relevant costing approach. Issues with relevant costing approach. Issues with relevant costing approach. Point number A, profit reporting. Profit reporting. Profit reporting. You just understand the explanation, no need to write in detail explanation. In my books of accounts, I'll still be reporting a loss on this contract. I'll be reporting a loss on this contract. Moment you see a loss, there will be a lot of question marks within the company. There will be a lot of question marks within the company. So technically you can say on an opportunity cost basis, I'm making money for the company, but still lot of question marks would be there within the company. So somewhere the manager may not be willing to do this contract. That could be an issue with the relevant costing approach, because in your books of accounts you will show a loss of 15,500. Loss of 15,500. Now you cannot go and fight saying that some of them are sunk costs, some of them are irrelevant. Most of the things could be difficult to make people understand. The second issue is pricing for future work. Pricing for future work. Today you have accepted this at 65,700. Today are at 70,000 with a very minimal profit. The reason for the 70,000 is could be you had some of the material in stock which were slow moving, you used that. Labor was redundant, available, you use that. Suddenly you see that labor is not fully available. So now you'll have to recruit labor, you'll have to incur labor cost. Material which was slow moving is over. Now you need material, we'll have to buy it from the market. So suddenly you have a situation where the future cost calculation says 80,000 when you do a relevant cost itself. And you go to the person and say 80,000, he says last contract you gave me for 65,700, why are you asking me 80,000 at this point of time? So pricing for future work can also be a tricky issue when you do with relevant costing approach. Relevant costing approach. Now another allied issue which can come is pricing of existing work for other customers. Pricing of existing work for other customers. Okay, what happened is I am a regular customer of this company. I keep giving this work to them, and doing their analysis, they were charging 1 lakh for me because their 85,500 was the cost. They were charging 1 lakh for me regularly, and I'm a regular customer, very happy with this. Suddenly I got to know that this guy has given this contract at 70,000 for some other customer. So I will feel that because I am loyal to this company, they have indirectly punished me. They have indirectly punished me because I am an existing customer, and what had happened is these guys were regularly charging 1 lakh to me. They were regularly charging 1 lakh to me. A special contract came which was charged at 70,000, and I somehow got to know about it. Somehow got to know about it. If I get to know about it, it will become a challenge. If I get to know about it, it will become a challenge. So many a times when some special prices are decided by an organization, they will make it very clear saying that this is a special sale which is happening at this point of time only, or this is some special order. For example, if you are doing domestic business, for exports you may charge a special price, but in domestic you may not charge that special price, because if other customers get to know about it, it will become a challenge for you. Now what technically needs to be done is something like this. When I say theory is basically these type of analysis. You will have to think logically and then come out with arguments. Now question may suddenly ask, what are the issues with relevant costing approach? What are the issues with relevant costing approach? Once you know it earlier, it will become easier for you to write it. You can think logically and also write an exam. It's not a problem, but that one, the time available will be a challenge. So that is why we are reading all these concepts, so that once it comes in exam, you may be able to reproduce this in exam, that what are the challenges which can come when you are going with this. Whatever I am written is there in a case study in, I think, chapter 13. There was one case study where this got suddenly added by them in one of the problem. ICI in one of the question added this, saying that what are the 2-3 issues which you will have if you go with relevant costing approach. So these are the challenges I will have if I go ahead with the relevant costing approach. Any doubts on this? Let's move to the next question then. If it's not a sunk cost, technically I don't see it not to be a sunk cost, but if it's not a sunk cost, it's 2.5 per hour. It is the average wage rate within the department.
But higher rate is why?
It's higher rate to whom? It's not to an outside the company, no. The department charges outside time to specific jobs using a rate of 5 per hour. The estimation department would do the estimation within the company. It's not going to do estimation for an external customer, no. So it doesn't have any outside demand. So captive consumption has outside demand, no outside demand. Scenario is no outside demand. Relevant cost is variable cost. In fact, it can be even 0 if the 2.5 is fixed. If the 2.5 is fixed, it can even turn out to be 0. Technically, labor cost is taken as a variable cost in all our analysis. But if you look at practical world, labor cost is more like a fixed cost in many situations. So there is an approach called theory of constraints, which we will learn later. That approach says labor is a fixed cost. It's not a variable cost. We have learned that labor to be a variable cost, but in a practical situation, most of the times, labor will turn out to be a fixed cost. So it depends. If it's fixed, then it will become 0. Let's look at question 20. Let's look at this. You go through the problem first. Okay, let me take you through the problem. Offered a contract to build for some 5 special guest houses. Contract price is 1 crore rupee. They'll also provide 2 grounds of land free of cost for the purpose of construction. The chief accountant of Ranka Limited has prepared an estimate: land 3 grounds, drawings and design, registration, materials, labor, general overheads, depreciation. The total requirement is 3 grounds. In that, 2 grounds will come free of cost. Drawings and designs, some 50% have been paid. Materials, cement and sand are already in stock, regular use. Bricks made several months before for a different contract. Others, material worth 2 lakh relating to interior decoration are in stock, but there is no alternative use for this. Skilled labor will be transferred. The project manager claimed that if men were returned to him, he could have earned company an additional profit. Supervisor undertakes various tasks. Something on the overheads. We are required to. Okay, Ranka Builders also hand another project which could be which would not be executed if the contract from Excel Limited were to be accepted. The estimated profit on that contract is 10 lakh. We are required to revise this estimate and then decide whether the contract is to be taken up or not. Revise the cost estimate, and based on that, we'll have to decide whether the contract is to be taken up or not. Let's start. Relevant cost statement. Relevant cost statement. of this special contract. Relevant cost statement of this special contract. This is question 20. Okay. Particulars calculation amount, land, drawings and design. Let me write all those items. Registration, land, drawings and design, registration. 1 minute for you to analyze all the three and write the relevant costs. I'll discuss in a minute. I'll discuss it in a minute. Write whatever makes sense to you. Right, wrong doesn't really matter to me. Okay, one more thing, we are doing this problem in lakhs, so right hand side corner, please write this in lakhs, or in amount in bracket in lakhs, wherever you want to write. If you are doing in lakhs, write it in the corner in lakhs. One minute. Right, wrong doesn't really matter. Please write something. Please write something. We'll discuss. Which one? You are asking on the land part? I'll come to it. I'll just give me a minute. Let's discuss it in a minute. In a minute, we'll discuss it. Okay. Now coming to the land part, I need 3 grounds of land. They have put 60 lakhs in their cost estimate. Below, I get to know that the total requirement of land is 3 grounds. In that, 2 grounds will come free of cost. So 1 ground into 20 lakhs technically. The relevant cost is only for 1 ground. You cannot technically take it for all the 3. The only issue I have now is I am seeing some of you writing it. I really don't like it. You should have written it and then corrected it if you have made a mistake. Write it in your notebook. It doesn't matter if you make a mistake. Again, I am repeating, please write. When I give you a minute or two, I want you to write in your notebook. Right, wrong doesn't really matter. Please understand that, because anyway you have a printed solution which is fully available to you. So let's not worry about having a neat notebook, because I don't know why is that issue for you. You make mistakes, I'm perfectly fine. When I'm writing, when I'm explaining the solution, I expect you to just correct the mistake if you have made it. Don't write the answer at that point of time. It's okay if these 3 adjustments you have not written, but next set of adjustments when I say, I want you to write in your notebook as if it's an exam. Please do that practice in the class itself, because case studies and all I cannot give you that time. So areas where I can tell you to do, please do that in the class. So it's okay if you make mistake. I'm repeating that for 2-3 times now. I want you to make mistake in the class. Drawings and design, what's the relevant cost? 0 or 3.5? Sure. Anyone feels it's 3.5? Anyone feels it's 3.5? It is 0. Payment of an expense does not decide whether it is relevant or irrelevant. Payment of an expense does not decide whether it is relevant or irrelevant. Least bothered whether the payment is made or not. If payment is not made, I'll have to make that balance payment, whether I accept the contract or I reject the contract. Technically, it is sunk cost. Technically, it is sunk cost 0. Technically, it is sunk cost and the amount is 0. Registration, nothing has been given in the question. So assumption is to be incurred. Assumption is to be incurred and 10 lakhs. To be incurred 10 lakhs. Any doubts on this? Clear? Next, material, cement, bricks and tiles, steel, interior decoration, others. In others, they said including interior decoration. I am splitting that into 2. Interior decoration and others. In others, you had interior decoration included in that. I've split into two, interior decoration and others. Again, maybe 1.5 minutes, you write anything, write an explanation, whatever is possible at your end. Later on, you can write extra things or correct it. Okay. Cement, what is the relevant cost? It is in regular use, you will have to replace it at a cost of 8 lakhs. So, replacement cost 8 lakhs, replacement cost and 8 lakhs. Brick and tiles represents purchases made several months used for a different contract. They could be sold readily for a net of 5 lakhs after meeting all further expenses. So, resale value 5 lakhs, resale value 5 lakhs. No extra information on steel to be incurred 10 lakhs, steel to be incurred 10 lakhs. The others was 10 lakh. In that, interior decoration and others I am splitting, interior decoration and others I am splitting. Material worth 2 lakh relating to interior decoration are in stock, others is 10 lakh. In that, interior decoration is 2 lakh, material worth 2 lakhs relating to interior decoration are in stock, for which there is no alternative use. They could be sold for 1 lakh. So, again resale value 1 lakh, to be incurred balance 8 lakh, 10 minus 2, balance 8 lakh, 10 minus 2, 10 minus 2, 8 lakhs. Cement is replacement cost, bricks and tiles resale value, steel to be incurred, interiors resale value, others to be incurred. Clear? Labor, skilled, unskilled, supervisory, skilled, unskilled and supervisory, skilled, unskilled and supervisory. One minute for you. Okay, skilled how much? 12, 2 or 14, what's the number? Skilled labor, they are saying skilled laborers will be transferred to the project from another project. So, transfer from another project could be busy, could be idle. Let us read it further. The project manager claimed that if men were returned to him, he could have earned the company an additional 2 lakh in terms of profit. So he is saying there is use for these people, I would have earned extra. So the relevant cost is lost contribution plus wages payable. Question has not given the contribution, question has given the profit. I cannot adjust it because I don't know whether the how much fixed cost has been subtracted. So contribution is also 2 lakh is the understanding, and in contribution obviously wages would have been subtracted. In fact, they gave the word profit. Profit obviously wages is subtracted. Wages is subtracted. So this is 2 plus 12. 2 plus 12, 14 lakh. Lost contribution plus wages payable. Lost contribution plus wages payable. Obviously the wages has been subtracted because the word used is profits. The word used is profits. So obviously the wages has been subtracted in this calculation. Unskilled labor, I don't think so any extra information is there. So to be incurred 8 lakh. To be incurred 8 lakh. Coming to the supervisory salary, it's 5 lakh. The supervisor undertakes various tasks in the site and his pay and continuity will not be affected by the new contract. If the contract is taken, he will devote half of his time. So the relevant cost is 0. It's a not the word commit, it's not a sunk cost, but it's called committed cost. The word is not sunk, it's committed cost. Sunk means you have already incurred it. Committed means you don't have a choice, you will incur it in future. You will incur this in future. Committed cost. Next, general overheads. I'll explain these items. Depreciation. General overheads and depreciation. General overheads, depreciation. If there is no extra information about general overhead, relevant cost is 0. Relevant cost is 0, assuming it's a fixed cost. All fixed overheads are irrelevant unless provided otherwise. All variable overheads are relevant unless provided otherwise. With extra information, you can make a variable cost irrelevant and you can make a fixed cost relevant. That all depends on extra information. For general overheads, the general overhead include both specific and absorbed overhead. If the contract is not taken, 4 lakhs of the same can be avoided. Of the 12 lakhs, 4 lakh is avoidable, 8 lakh is committed. 8 lakh is committed. So general overheads, avoidable cost 4 lakh. General overheads, avoidable cost is 4 lakhs. Avoidable cost is 4 lakhs. Okay, now coming to this item called as depreciation. By rule, depreciation is irrelevant. Okay, by rule, depreciation is irrelevant, but something else will be relevant. Something else will be relevant. Depreciation as such is an irrelevant expense unless the question gives some information to make it relevant, but some extra information would be there. Now listen. Relevant cost for, you can write this in a minute, for usage of machine. Relevant cost for usage of machine. Two categories are there: regular use machine, irregular use. A machinery could be regularly used by the company, a machinery could be irregular used by the company. If there is a regular use machine, that is, there are 10 machines in the company, every machine is being used by the company for some purpose or the other, you get a contract. You get a contract. If you get a contract, what happens is, in yes scenario, buy machine today, buy now, you will have to buy this machine now because you have got a new contract. If you don't get a contract, you will continue to buy machines. The understanding is you will get a machine buy later, buy now or buy later. The understanding is either the machine has to be purchased now. If you purchase it now, you need not buy it later. If you are not taking up the contract, you buy this machine later. See, at the end of the day, 10 machines have to become 11 machines for the company. You are having 10 machines. This has to become 11 machines in few days. Why should it become 11 machines? Because you are regularly needing this machine. Suddenly a contract came. You are planning to buy a machine on maybe 2023 January 1. That was the plan. Buy a new machine by 2023. Because a contract has come, let's buy the machine now itself. Let's buy the machine now itself. So whether you will have to buy the machine now or buy the machine later is the question as far as a regular use machine is concerned. So for relevant cost here, difference in replacement cost. Difference in replacement cost. The question will say, today if you buy 30 lakh rupees, you buy it a year later, it's 25 lakh rupees. Buying a year later does not mean it's a brand new machine. See, what happens is, it is the same condition of the machine. So what you need to logically think is, you buy a machine today for 30 lakh rupees. Later on, after a year, this machine would be released by the company and used for some other contract. So what we compare is, buying a machine today for 30 lakh, buying a similar machine which is like 1 year used, the question will not give you all these points, this is just for your understanding. Buying a machine after a year at what price? Buying a machine after 1 year for what price? Today it's 30 lakh, after a year it is 25 lakh, relevant cost is difference between this 30 minus 25. If it's irregular use, yes means sell the machine later, no means sell the machine today, If it's an irregular use machine, I don't need it, I don't need the machine. So if the contract comes, I will use the machine, and sell it after 6 months. If the contract does not come, I'll sell the machine immediately. So this side, difference in resale value. See, when it comes to replacement cost, in an yes scenario you will have higher replacement cost, in a no scenario you will have lower replacement cost. Difference is relevant. When it comes to resale value, in a yes scenario you will have lower resale value, in a no scenario you will have higher resale value. Yes minus no, minus of some amount, minus 20 lakh, minus of minus 25 lakh, so that will become plus. So the difference is going to be the relevant cost. So one scenario it is difference in replacement cost, another scenario it is difference in resale value. If it's a regularly used machine, depreciation as such is of no use, If it's a regular used machine, difference in replacement cost. If it's an irregular use machine, difference in resale value. Maybe leave some 6-7 lines, captive usage or usage of machine, usage of machine, two sides, regular use, irregular use. Fan won't work, we are adjusting the AC part. Regular use, irregular use, regular, irregular, regular, put arrow mark down, difference in replacement cost, irregular, difference in resale value, Clear? Any doubts on this? See, point is simple. In a yes scenario, you'll have to buy it today. In a no scenario, you'll have to buy this machine. You need this machine. You maybe you'll postpone your purchase and buy it later. When it comes to irregular use, you are planning to sell the machine. Sell is compulsory to be done. Either you sell it today or you sell it later. So that's the scenario. So here I think it says, the equipment that would be used in the contract was bought 1 year ago before for 30 lakhs and is expected to last for 5 years. It can also be used on other contract. Current replacement price will be 32 lakh. See, moment you get this contract, you will have to buy this for 32 technically. Why will you have to buy this? Because this machine is already used on some other contract. Maybe you can use the machine, but for some other contract you will have to buy the machine. And in a year's time it will be 25 lakh. So if you buy today it's 32 lakh, you buy it a year later it is 25 lakh. Difference in replacement cost. Depreciation, difference in replacement cost, 7 lakhs. replacement cost 7 lakhs. Apart from this, there's one more relevant item. Can you tell me what is that? It's not there in the table. Opportunity cost of another project. Ranka Builders also on hand another project which would not be executed if the contract from Excel Limited were to be accepted. Estimated profit on that project is 10 lakhs. You are likely to earn a profit of 10 lakhs on that other project. 10 lakhs on that other project. So, opportunity cost profit lost on other contract, profit lost on other contract, opportunity cost profit lost on other contract. So, we have considered all of this. Against all this, a single item is 100 lakh of revenue. Against all of this, that's how we consider the revenue. We do consider the revenue of the project. We cannot consider every item. I cannot say labor, when I analyze labor, add revenue. That is not possible. So, against all this item, a single benefit is revenue of 100 lakh. A single benefit is revenue of 100 lakh. So, total relevant cost total relevant cost 105, revenues, relevant profit or loss, revenues, relevant profit or loss. The earlier question did not ask a profit or loss to be done. This question we have to decide on whether to take up the contract or not. Clear? Okay. Now the question has asked us to, in light of the given, you are required to indicate with reasons whether the contract from Excel Limited should be accepted or not. This was an old syllabus exam question. I have just done that. Now the conclusion alone, when it comes to new syllabus, undergoes slight bit of changes. Undergoes slight bit of changes. What is the conclusion change? I'll explain. Now listen. From a financial, you can write in a minute. Listen. From a financial point of view, the contract is not to be taken up. You can write in a minute, as there is a loss of rupees 5 lakhs. However, every answer we do it like this only. However, what I will now say is, I also need to consider certain non-financial factors. Certain non-financial factors. Every question will have this. Question solution may not have this, but a lot of question solution will have this, because I copied it. I did not add those extra points. But most of the times in ICAI solution for new syllabus, every solution they'll add some non-financial factor. Now, non-financial factors like possibility of further orders. If there is a possibility that I can get future order from this company, I may decide to take up this contract even at a loss. I may decide to take up this contract even at a loss initially. Even at a loss initially. This is just one point. You will have to think logically what other points can come. There are set non-financial factors for every different decision. Like outsourcing, you will analyze something called as outsourcing. There are set non-financial factors. Special orders, there are set non-financial factors. Shutdown decision, there are set non-financial factors. So that is something you will learn. But this doesn't fall under the standard set of questions in your ICAI. The material has standard set of decisions to be taken. This does not fit in there. So I'll have to think logically and write. So one of the points I'm thinking is, if there is a possibility of future order, is there a possibility of future orders, and is there an impact on my, so one possibility of future order with Ranka Builder. Also there is a possibility of future order with some other customers. Possibility of future orders. So everything you'll have to think logically, that's all. It is basically think logically what will happen. Because you take up this contract, is there a possibility Ranka Builders can give you some other work? Yes. Think whether that is substantial profit. Now you cannot give an answer finally. We'll say, however, the company should also consider non-financial factors like possibility of future orders from Ranka Builder / improvement in goodwill of the company leading to future orders from some other customer before taking a final decision. That's all. I'll not give any answer. I'll just say before taking a final decision, please consider these points and then you decide whatever you want to do. I'm not saying, because I cannot give a conclusion, because the point is these non-financial factors, how much important it is, you cannot answer. For example, some question, you will have this questions which will say ethical concerns. There are problems on that also, where you can make a profit of 50 lakhs, but it is possible that because of this decision your customer may feel cheated. There is a possibility like that. So you will say you will have to consider non-financial factors like this before taking a final decision. Now I'm not telling them whether you take it up or you don't take it up, because it's not in my hand, because I don't know how critical those non-financial factors may be. Possibility of future order, there's a possibility that you may get some 10-20 orders from Ranka Builders and other customer, you may take up this contract, and practically that was what happens. People will take up this contract at a loss because there is a possibility of further orders. No, right? From a financial point of view, the contract is not to be taken up as there is a loss of 5 lakhs. Loss of 5 lakhs. However, the company should also consider non-financial factors / qualitative factors. This is the other name. You can use any of the word. Non-financial factors / qualitative factors. Technically it's subjective. Qualitative is subjective, quantitative is objective. You can, if I say loss is 5 lakh, everyone in the room will say project is not to be taken up. Whereas subjective matter, some people will say take it up, some people will say not to take it up. So qualitative factors such as possibility of future orders from Ranka Builders, or I think just a minute, sorry, Excel Limited, future orders from Excel Limited, / possibility of orders from other customers, on the basis of this work, should be considered before taking a final decision. I am not giving an answer and all, I am just saying before you take a final decision, please consider these points and then decide before taking a final decision. This may not be there in the solution because I did not change the solution, but in new syllabus the question itself will tell consider non-financial factors and then arrive at your decision. Every decision you take, you will have to go with non-financial factors. It is not only number crunching. You cannot just go by number, profit, go ahead, loss, close it. That's not what is going to work. You will have to consider extra points and then decide what needs to be done by the organization. Okay.
Actually, in question they have said 10 lakhs as others including interior decoration.
Correct.
But in question in points column they have said the others are interior decoration for 2 lakhs and it can be sold for 1 lakh. But
Correct.
the opportunity, in case if we are selling to others, we will be getting only 1 lakh. But in case if we are using it for the project, we have to spend 2 lakh.
No, you already have this material in stock. No, why will you spend 2 lakh?
Yeah, I have already have that. In case I am selling that to other person, I will be getting 1 lakh. Now, if I am selling that other person, I will be getting 1 lakh.
Correct.
If I use it in my project, I will be reducing the 2 lakh cost.
No, so if you use in your project, this 10 lakh already has this 2 lakh, so 8 lakh is the others, 2 lakh is interior decoration. Let's club it separately. Okay, when you use it in your contract, you don't save any money and all, because you are using it in the contract. The material is already available in the company, so you are using that material which is available in the company. So when you use this material, you lose the opportunity of selling that material. What do you get out of all of this? Finally, you get 100 lakh of revenue using the interior decoration material, other steel, bricks, pipes, everything put together gives you 100 lakh of revenue. Using it in the contract does not save 2 lakh. No, how is the cost saved by 2 lakh? The material is already in stock. No, this material. So just because I'm subtracting 10 minus 2 does not mean I'm saving 2 lakh rupees. The question just said others including interior decoration. They could have made it like interior decoration 2 lakh, others 8 lakh. This doubt may not have come to you, because the interior decoration is 2 lakhs, a part of this 10 lakh. This does not mean I'm saving 2 lakh rupees for the company and all. Because when will you save 2 lakh is if the same interior decoration material could have been used in any other contract, and you lose the opportunity of using that in that contract, then the cost of the substitute comes. This interior decoration is not a substitute material, no, it's for the same contract. Sure. Okay. Okay, let's continue now. Okay, let's come to question 21. A lengthy problem but an excellent question to understand most of the concepts of relevant costing. Let's first go through the problem. B Limited is a company that has in stock material of type XY that will cost 75,000, now obsolete and has a scrap value of only 21,000. Other than selling the material for scrap, there are only two alternative uses for them. Alternative one, convert it into a specialized product which will require following additional work: material A, material B, 5,000 unskilled, semi-skilled, highly skilled, selling and delivery expense, advertising. Conversion will give 900 units of saleable product, and this could be sold for 300 per unit. That's the alternative one. You convert it into a specialized product. Material A is already in stock, widely used within the firm. Present stock together with orders already planned will be sufficient to facilitate normal activity. Extra material used will necessitate such material being replaced immediately. Is also in stock but is unlikely any additional supply can be obtained for some considerable time because of an industrial dispute. At the present time, B is normally used in the production of product Z, which sells at 390, incurs total variable cost excluding material of 210. Each unit of Z uses 4 units of material B. The details are as under: acquisition cost, NRV and replacement cost. Alternative 2, adopting the obsolete material for use as a substitute for a sub-assembly that is regularly used within the company. Details of extra work and material required are: material C, direct labor, unskilled, semi-skilled, highly skilled. 1200 units of the sub-assembly are regularly used, which are bought at 900. Adaptation of material XY would reduce the quantity purchased from outside to 900. Since the volume purchased is less, discount would be lost. Material C is not available externally. Though 1000 units required would be available from stock, it would be produced as extra production. Standard cost of material C is direct labor, raw material cost. Wage rates and overhead rates are as under. Unskilled labor is employed on a casual basis. Sufficient labor can be obtained to exactly meet the production requirement. Semi-skilled labor is part of the permanent labor force, but the company has temporary excess supply. Highly skilled labor is in short supply, cannot be increased significantly, presently engaged in meeting the demand of product L. Present cost information advising whether the stock of XY should be sold, converted into a specialized product, or adopted for use as a substitute for sub-assembly. What should be the minimum selling price if the company wants to scrap the material? If it wants to convert into sub-assembly, what is the maximum price they can pay for purchase of sub-assembly? Go through the question. Okay, the question talks about a material XY which had cost some 75,000 is now obsolete and has a scrap value of 21,000. Totally there are technically 3 alternatives. Okay, the question talks about only 2 alternatives. The third alternative is selling it as scrap. The third alternative is selling it as scrap. I'll analyze alternative 1, find out what is the benefit I have. Alternative 2, what is the benefit. Third alternative, I can sell it as scrap for 21,000. The first alternative is I look at revenue enhancement. Converting into a specialized product will give you extra revenues. So that's the benefit you get. Alternative 2 is cost reduction. You will use this as a substitute for sub-assembly. So there will be a cost reduction. So in alternative 1, you will earn revenues and there are certain expenses. Revenues minus those expenses will give you the net benefit. Alternative 2, there will be a saving in cost. Saving in cost is similar like a revenue. Saving in cost is the benefit for the company and there are set of costs which they are going to incur. Again, you will get the net benefit. Alternative 3 is you sell it for 21,000, no expenses, 0 expenses for that. There is no expense for that item. Let's start. Analysis of alternative 1. Question 21. Working note 1. Analysis of alternative 1, conversion into specialized product. Conversion into specialized product. Particulars calculation amount. Conversion into specialized product. Into specialized product. Converting the obsolete material into a specialized product. That's the first option I have. When I convert this, I will get one benefit which is selling 900 units. I'll be able to sell 900 units. Revenue, or you can write benefits, revenues. Mostly question will have only one benefit. Rare question you may see 2-3 benefits also. You will see those questions later on. Revenues. Revenues 900 units into 300. 900 units into 300. I don't see any other benefit coming in, but still I'll leave 2 lines gap if at all any other benefits are to be written. Then costs. I don't see any other benefit in this question, but if at all some other benefit comes, we have left space for that. Revenues, costs. Revenues is 2,70,000. Cost material A. Let's first write the items. Material A, material B. Okay, let's first analyze material A and material B. Material B I'll take you through. Let me know material A, what is the relevant cost. Material B I'll take you through. Material A, what is the relevant cost? So 600 units into replacement cost is 90. 600 units into 90. Fast moving replacement cost 600 into 90. Okay, coming to material B. Material B, I need some 1000 units of material B. I need some 1000 units of material B. Material B is also in stock. It is a in stock material, but is unlikely that any additional supplies can be obtained for some considerable time because of an industrial dispute. At present, it's normally used in the production of product Z. Material Z available, not available? Answer is available. Fast moving, slow moving, fast moving. Fast moving relevant cost is replacement cost, but the problem is there is no option of replacement. There is no option of replacement because you are not in a position to buy this in the market because of industrial dispute. This is like labor available, busy and cannot be substituted. Labor available, busy and cannot be substituted. Relevant cost is lost contribution plus material cost, not wages here, material. Lost contribution plus material cost. See, the logical one is replacement cost, but the problem is because of an industrial dispute, you cannot buy it. So, if you want to use it for this alternative one, you can use it by compromising production of product Z, by compromising production of product Z, or by losing the contribution of product Z, by losing the contribution of product Z. Product Z is being sold for 390, variable cost is 210. They are making it very clear in this variable cost, material B is not added. In this variable cost, material B is not added. So, the formula is lost contribution plus material cost, but don't add material cost again. Don't add material cost again because it was anyway not subtracted. It was anyway not subtracted. 390 minus 210 is 180. But the cost contribution is not exactly 180. Then they are saying each unit of product Z, 4 units of material B. So, the lost contribution is 180 for 4 units of raw material. 180 for 4 units of raw material. Contribution is 390 minus 210, which is 180. 390 minus 210, which is 180, and this 180 is for 4 units of material B. For 4 units of material B. Clear? Any doubts on this? Now write note 1. Note 1. Material B is in stock, and is a fast moving item, is in stock and is a fast moving item, This item cannot be purchased. This item cannot be purchased now due to industrial dispute. Relevant cost in this scenario. Relevant cost in this scenario is lost contribution plus material cost. Lost contribution plus material cost. Lost contribution plus material cost. Material B is used in production of product Z, which gives contribution of 180 per unit, while calculating contribution, material cost was not subtracted, and hence we shouldn't add it back. Contribution of 180 per unit, is earned by using 4 4 units of material B is earned by using 4 units of material B. 4 units of material B. Hence we can say that contribution lost is rupees 45 per unit of raw material. Contribution lost is 45 per unit of raw material. 45 per unit of raw material. 45 per unit of raw material. So you come to material B, I think we were using 1000 units, so 1000 into 45. 1000 into 45. Material B 45,000. 1000 into 45. 1000 into 45, 45,000. Any doubts on this? Clear? Unskilled labor, semi-skilled labor, highly skilled labor. 1 minute for you to do. Unskilled, semi-skilled and highly skilled. Analyze it. We'll discuss it in a minute or two. Okay. I need 5,000 hours each of unskilled, semi-skilled and highly skilled. The rates for them is 3 rupees, 4 rupees and 5 rupees. Unskilled is 3, semi-skilled is 4, highly skilled is 5. Unskilled labor, how much is the relevant cost? 5,000 into 3. Wages payable, I can say not available. Wages payable, you can recruit as per your requirement. You can recruit as per your requirement. Not available, wages payable. Semi-skilled labor, available, idle and cannot be terminated. Available, idle and cannot be terminated. Highly skilled labor, available, busy, cannot be substituted. How much per hour? No, read it carefully. It's not 29, you are close, but it's not 29. No, how much per hour? How much per hour you said? Sorry. Not 13. 44. No. It's 11. It's 11. Lost contribution plus wages payable. You cannot directly add 24. 24 needs 4 hours of highly skilled labor. 24 needs 4 hours of highly skilled labor. 24 needs 4 hours of highly skilled labor. So 24 by 4 is 6 per hour. Last contribution is 6 rupees. Normal understanding is when they have calculated this 24, they would have subtracted the labor cost. They would have subtracted the labor cost. So I am adding it back. The normal understanding is that would have been subtracted. So we are adding it back. So lost contribution 6, wages payable 5, 5,000 into 11. Lost contribution plus wages payable 5,000 into 11. Then I have some, any doubts till this? Then we have some selling and delivery expenses. They have made it very clear, extra selling and delivery expenses to be incurred. Selling and delivery expense to be incurred. Advertising to be incurred. Advertising to be incurred. Any doubts on this? Apart from this, there are few more expenses. If you can spot them, let me know. There are few more expenses there in this question for this alternative. Few more expenses. Let me know whatever you feel as an expense which should come. There is an information on variable overhead and fixed overhead. That depends on how many labor hours you work. That depends on how many labor hours you work. So variable overhead, fixed overhead, variable overhead, fixed overhead. This job needs how many labor hours all put together? 15,000. Doesn't matter whether it is relevant, irrelevant, because in that 15,000, 5,000 had a zero relevant cost. So that doesn't matter. 15,000 number of hours. Variable overhead 1 per direct labor hour. So if you tell a person to work, for example, if you tell a semi-skilled person to work on the contract, the relevant cost of him is 0. But on that I will incur some variable overhead. When he is working, I am going to incur some variable overhead, because the variable overhead given in the question is 1 per direct labor hour. So this is 15,000 hours into 1, and this is irrelevant unless they give me extra information. If they give me extra information on fixed overhead, I can make it relevant. Variable overhead 15,000 into 1, fixed overhead nil, fixed overhead nil, fixed overhead nil. One more item can come in this statement. I am not going to write it now, and it's not needed the way we are analyzing it. I will explain that concept later on. The way we analyze, you change the analysis, one more item will come here. What is that item? Why should it come? I will explain later. So fixed overhead is 0. Total relevant costs. Total relevant costs. Relevant benefits. Relevant benefits, relevant costs, and relevant profit or net profit of alternative 1. Net profit of alternative 1, some 41,000 rupees. The net profit of this alternative is 41,000. Any doubts on this? Clear? So you will make a net profit of 41,000 in alternative 1. Net profit of 41,000 in alternative 1. Clear? Any doubts? Next. Working note 2, analysis of alternative 2, conversion into subassembly. analysis of alternative 2, conversion into sub-assembly. Conversion into sub-assembly. Conversion into sub-assembly. Again, benefits, and then we'll capture the costs. Benefits, and then we'll capture the costs. Conversion into sub-assembly. Now, when you convert into sub-assembly, alternative 2, adopting the obsolete material as a substitute of the sub-assembly, the benefit somewhere lies in this para. The benefit somewhere lies in this para. Earlier, we used to buy 1200 units at the price of 900. Now we will buy 900 units but at a price of 1050. Ideally it could have continued as 900, but they are saying because you are buying lesser quantity, the discount is reduced and you are now required to buy it at 1050. You are required to buy it at 1050. So, in benefit, saving in purchase cost. Saving in purchase cost. Saving in purchase cost. Purchase cost. 1200 units into 900. This is the earlier purchase. 1200 into 900 minus 900 units into 1050. 900 units into 1050. 1200 into 900 minus 900 into 1050. Net saving of some 1,35,000. There's a saving of 1,35,000. That's the benefit of converting this product into a sub-assembly. Converting this product into a sub-assembly, you will have a net benefit of 1,35,000. Maybe 2 lines gap. Costs, if at all any other benefit is there. Costs. They have given the cost to you. Material C, some unskilled labor, semi-skilled labor, highly skilled labor. Material C, some extra information is there. I give you some 4 minutes. Write whatever you want to do in your notebook. Write it. We'll discuss in 4 minutes. Some material C, highly skilled, unskilled, whatever comes to your mind, whatever extra cost there. Please keep writing everything. Right, wrong doesn't really matter. Please write it. It doesn't matter whether you go right or wrong in the calculation. Okay, I'll start discussing it now. I hope you have done it. At least something should be written in your notebook. Right, wrong doesn't matter. Material C will not fit in that standard rule which I said, available, not available, that and all will not work here. In stock, out of stock, fast moving, slow moving rule is not going to work. Material C is not available externally. It cannot be purchased itself. It cannot be purchased. It's not in stock. But you cannot say relevant cost is replacement cost because it cannot be purchased. It has to be produced. It has to be produced. 1000 units would be available from stock. It would be produced as extra production. It will be produced as extra production. To produce this, you need a raw material of 13 rupees, labor of 6 hours of unskilled labor. Unskilled labor is paid at the rate of 3 per direct labor hour. 3 per direct labor hour, 13 plus 6 into 3, 18, put together it is 31. That is the relevant cost of producing product C. Relevant cost of producing product C is 31. Clear? Any doubts on this? This is incorrect. It is not 31. It is not 31. Think and let me know what are you missing. Variable overhead. They will not specify there that there is a variable overhead. When you are using 6 hours of unskilled labor, indirectly 6 hours of variable overhead will also be incurred. Indirectly 6 hours of variable overhead will also be incurred. So it is not 31 rupees. On top of this 31, you will have to incur variable overhead, which is 6 into 1 rupee. 6 into 1 rupee. Fixed overhead will not come. Fixed overhead will not come. Clear? Any doubts on this? It is not 13 plus 6 into 3. It is material plus labor plus variable overhead. Material plus labor plus variable overhead. Variable overhead will not be specifically given in the question. It's not mandatory for them to give this information. So material C is 13 rupees plus 6 hours into 3 plus 6 hours into 1. 13 plus 6 hours into 3, 6 hours into 1. Multiplied with 1000. Multiplied with 1000. 37,000. Material C is 37,000. Clear? Any doubts on this? Material C is 37,000. Unskilled labor 4,000 hours into 3. 4,000 hours into 3. Semi-skilled committed cost 0. Semi-skilled is committed cost 0. Highly skilled is 4,000 hours into how much? 11. 44,000. Variable overhead is 4,000 hours of unskilled, 1,000 hours of semi-skilled, another 4,000 hours of highly skilled, 9,000 hours. Whatever was needed for producing material C was considered separately. So, let us not bring that now. 9,000 hours is needed for this adaptation. So, 9,000 hours into 1, and fixed overhead irrelevant cost. Fixed overhead is irrelevant cost. Fixed overhead is irrelevant cost, which is 0. Fixed overhead is irrelevant cost, which is 0. Irrelevant cost, which is 0. So, total benefits 1,35,000. Total benefits is 1,35,000. Total costs 1,02,000. Total benefits 1,35,000. Total cost is 1,02,000. Total cost is 1,02,000. Relevant benefit 33,000. Relevant benefit is 33,000. Relevant benefit is 33,000. Clear? Any doubts on this? Third alternative is sell as scrap. Alternative 3, sell as scrap. Sell as scrap. Relevant benefit of 21,000. Relevant benefit of 21,000. Okay. Now listen, an important concept for you to understand. We are comparing 3 alternatives. Alternative 1, alternative 2, alternative 3. The first alternative had a net benefit of second, and this is 21,000. If you are not analyzing alternative 3, let us assume you do not bring in that sale as a scrap as an option itself, you do not bring in that, then this 21,000 will have to be taken as opportunity cost in both alternative 1 and alternative 2. In both alternative 1 and alternative 2, this 21,000 is one of the cost. This 21,000 is one of the cost. Any item, for example, the scrap value of 21,000, either it should be considered as a benefit of one alternative or it should be considered as an expense of other alternative. You cannot give effect to both, because some students will say, I will consider this 21,000 as a negative item in alternative 1 and 2 and as a positive item in alternative 3. That will become double counting of the same adjustment. That will become double counting of the same adjustment. Either consider it as a benefit or consider it as a cost. Considering both will lead to double counting of the same adjustment. I can remove alternative 3 altogether, or in alternative 3 I can say no benefit, that is all, 0, because you are anyway selling scrap is considered as an opportunity cost in alternative 1 and 2. Either consider an item as an opportunity cost or consider an item as a relevant revenue. Considering both will lead to double counting of the same adjustment. Be very clear on this concept, because this will keep testing you at multiple places. Because this question you did not get a doubt why I did not take 21,000 as an opportunity cost, but normally I would have taken this as an opportunity cost, because the first item would have said I am using the scrap material available in stock, can be sold, relevant cost is resale value. Relevant cost is resale value, but we did not consider that resale value in our analysis. In our analysis, we did not consider that resale value. So that ideally the 21,000 should have come as an opportunity cost of alternative 1 and 2. It should have come as an opportunity cost of alternative 1 and 2. Clear? Any doubts on this? Okay. Conclusion. There is some AC issue today. I'll try to sort it out. I'll see what happened. We'll sort it out in the next session. Conclusion. The company should go ahead with alternative 1. Should go ahead with alternative 1. Alternative 1, conversion into specialized product. As the same has the highest net benefit. As the same has the highest net benefit. I'm not getting into non-financial factor, but one non-financial factor which you can bring in is you're going to do some specialized product. Is there any possibility of this specialized product affecting the sale of your any other product? Is there any possibility of this specialized product, because this product has come, would customers buy this product and give away some of your existing product, which will lead to loss on sale of the existing product. I don't have much information, so I'm not getting into that part, but I can bring in one non-financial factor which I'm able to think through, is if there is any possibility of sale of the existing products getting affected. Clear? Okay, second part of the question. What would be the minimum selling price if the company wants to scrap the material? You told them convert into specialized product. Company is saying no, I'll not convert into specialized product. I want to sell it. Think logically and let me know at what price should I sell. Minimum price if I want to scrap the material. How much? At least 41,000. So minimum price which I want to earn if I want to scrap the material is 41,000. So you can write 41,000. $41,000 is the minimum selling price. Minimum selling price if you want to scrap the material. Okay, if the company wants to convert the material into sub-assembly, so you are saying I'll go ahead with the alternative 2. What is the maximum price they can pay for purchase of sub-assembly? Now listen. Here the relevant benefit is 33,000. I want this to become 41,000. I want this to become 41,000. This will become 41,000 if this number is 1,43,000. If this number is 1,43,000. So I want a benefit of 41,000. You can do the working in some time. I want a benefit of 41,000. Why 41,000? Because the alternative one is giving a benefit of 41,000. So 41,000 will come if this is 1,43,000, and this can become 1,43,000 if this changes, this purchase price changes. They are saying what should be the maximum purchase price you should be willing to pay if you want to go ahead with the option of, conversion into sub-assembly. How will that happen is saving in purchase cost should be 1,43,000. How can that become 1,43,000? 1,200 into 900 minus 900 into x. That x is the purchase price. If the purchase price can change, there's a possibility of the sub-assembly option becoming better. As of now, you are doing 1,200 into 900. Later on, you are planning to do 900 into 1,050. If this 1,050 can change, savings can change. I want an overall saving of 41,000. Now, right here, computation of purchase price. The company would go ahead with subassembly option, would go ahead with subassembly option if the net benefit is 41,000. If the net benefit is 41,000, if the net benefit is 41,000, net benefit will be 41,000, will be 41,000 if saving in purchase cost, if saving in purchase cost is 1,43,000. Saving in purchase cost is 1,43,000. Saving in purchase cost is 1,43,000. Any doubts on this? Now write saving in purchase cost is equal to 1200 into 900 into 900 minus 900 units into purchase price. 900 units into purchase price. $1,43,000 is equal to 10,80,000 minus 900x. Let me know what is the answer to x. 10 point. So if the external purchase price can be 1041 rather than that 1050 given in the question, if it can be 1041, then I'll be okay to go ahead with the subassembly option. I'll be okay to go ahead with the subassembly option if it can be 1041.11. Clear? Any doubts on this? Any doubts on this part? The most important part is this variable overheads can be hidden. The variable overheads part can be hidden in a question. So be careful about that. Variable overheads can be hidden. I think in the solution, okay, in the solution, the scrap value was subtracted. In the solution, the scrap value is subtracted. I have not considered an alternative 3 in the solution. I have not considered an alternative 3 in the solution. Scrap value was subtracted in the solution. And when we had to calculate this price, we said plus another 20,000. We added and made. Our answer is exactly same. It's just that the way you analyze it, you can consider that 21,000 as a subtraction, or you consider as an extra income item. But don't give effect to both. That's the only thing we need to take care. Okay, go through question 22. Go through 22. You do a relevant cost statement. Do whatever comes to your mind. 5 minutes for you. Do it. We'll discuss. 5 minutes. High possibility some errors would be made, but I want you to try it. the solution below itself, but don't look at it. So just take care of that alone. High possibility some mistakes would be made in the solution. You will make mistakes. One more minute and then I'll start discussing the solution. I want you to give it a try. I am perfectly fine if you make mistakes, but please write it. Please don't wait for my instruction. I've seen some notebooks where mistakes are done. I'm happy about it. Some notebooks I've already seen where mistakes are there. And you'll understand the adjustment better. Let's start. Relevant cost statement of the research project. Research project. benefits, costs. A research project which to date has cost the company 2,50,000 is under review. Cost incurred till date, that's the first item. Cost incurred till date. We have incurred 2,50,000. We have incurred 2,50,000. How much of this is relevant? Zero. Sunk cost. Cost incurred till date, sunk cost 0. This is already incurred by the company. It is anticipated that should the project be allowed to be proceed, would be completed approximately in 1 year when the project would be sold to government agency for 3 lakhs. So revenue from project 3 lakhs. Then material 90,000. The following is the additional expenses to be incurred. Material is 90,000. The material which has just been received, is extremely toxic, and if not used on the project would be disposed by special means at a cost of 25,000. So this is some product which is extremely toxic. Its material available, cannot be used on other product, though it is purchased recently, but it's like a slow moving item. It cannot be used on other contract. Relevant cost is resale value. How much is the resale value? How much is the resale value? Resale value is minus 25,000. Read that line carefully. It's extremely toxic, and if not used on this project would be disposed. I'll have to dispose the material by spending money. I'll have to dispose the material by spending money. When I sell it, I will not get money. If I give this material to someone, he will say, give the material and pay me 25,000. Give the material and on top of that, pay 25,000. So if you want to write it in the cost side, the relevant cost is minus 25,000. So in the cost side, it will reduce the cost. Or you can write it in the benefit side, 25,000. You can write this as a benefit 25,000. I am explaining again. It says it's an extremely toxic material. If not used on the project, would be disposed by special mean at a cost of 25,000. If I look at yes and no scenario, yes, use the material on the contract, spend 0. Use the material on the contract, spend 0. Don't use the material, dispose it, pay 25,000. Normally when you dispose, you are earning money. In this question, when you are disposing, you have to pay money. So in yes scenario, it is 0. In no scenario, it's 25,000. 0 minus 25,000. The worth of this material no is minus 25,000 rupees. The value of the material is minus 25,000. Before buying, the value is 90,000. After buying, if you cannot use it, the value is only negative 25,000. The value is negative. So you can write it in the cost side. That is perfectly fine. If you are writing in the cost side, it's minus 25,000. If you are writing in the benefit side, it's plus 25,000. Either of the places you can write it. But the worth of this material is negative 25,000. Negative 25,000. Disposed of at a cost. At a cost. You will have to pay money and then dispose it. You will have to pay money and then dispose it. All other adjustments, if you see, it will say it will be disposed of, it will be sold by, you will get some 10 rupees, 20 rupees, something you will get. Here you are not going to get money, you have to pay money. So saving in disposal cost, 25,000. Saving in disposal cost. If you continue with the project, you will save this 25,000 rupees. If you continue with the project, you will save 25,000 rupees. I am okay even in the cost side if you write minus 25. Even in the cost side if you write minus 25. I saw notebooks where 25,000 was written, so that's a mistake you would have made. Now you will understand it better. So that's why I wanted you to do it. It is saving in disposal cost. You want to write it in the cost side, it's minus 25,000. In the cost side, it is minus 25,000. Any doubts on this? Any doubts on this? So this is a situation where, for example, if you go by your book accounting, you will say 90,000 is the cost, but the real cost is minus 25,000. Because if you are not using this material on the contract, you will have to dispose it. Next, labor. This should be simple. Labor is highly skilled, difficult to recruit. Available, busy, cannot be substituted. Available, busy, cannot be substituted. They were transferred to the project from a production department at a recent board meeting. The work manager claimed that if the men were returned to him, he would earn the company each year 2 lakh extra sales. The accountant calculated the prime cost excluding the direct labor cost. Prime cost, in that prime cost they have not added the labor cost, is 1 lakh rupee. Overhead absorbed, all fixed is 20,000. Lost contribution plus wages payable. Lost contribution is 1 lakh rupee. 2 lakh minus 1 lakh. Wages was not subtracted, so I am not adding it back. Wages was not subtracted, so I am not adding it back. So labor lost contribution plus wages payable, lost contribution is 1 lakh and wages payable is 60,000, but anyway it was not subtracted, so we are not adding it back. So this is 1 lakh rupee. Lost contribution is 1 lakh. Or if you calculate the contribution properly, contribution is 40,000. Contribution is 40,000. That's what you normally do in your accounting. In your marginal costing, you will calculate the contribution to be 40,000. On 40,000, add another 60. Add another 60. Research staff. A decision has already been made that this will be the last major piece of research undertaken. Consequently, when the work ceases, the staff involved will be made redundant. Redundancy pay has been estimated at 35,000. That is, I will tell these employees to leave the organization. When I tell them to leave the organization, I will have to pay them 35,000. In a yes scenario, the research staff will continue in the company. In a yes scenario, research staff will continue in the company. When they continue, you have to pay them 60,000. Listen for some time. You will have to pay them 60,000. In a no scenario, you will have to make them redundant and pay them. It doesn't end here. You will pay 60,000. Once the work is done, you will have to make them redundant and pay 35,000. You will have to make them redundant and pay 35,000 because they will be made redundant at some point of time. They will be made redundant unless the question tells that if these employees continue for 1 more year, redundancy pay need not be made. Redundancy pay need not be made. Or they can say if they continue for 1 more year, redundancy pay will be 20,000. Redundancy pay will be 20,000. Something could be mentioned in the question. If nothing is mentioned, yes scenario 60 plus 35. No scenario 35. Relevant cost is difference, which is only 60,000. There is a possibility of this becoming 25,000 if you are able to save the redundancy charges by telling the employees to work for 1 more year. If the employees work for 1 more year, the redundancy charges could be saved. An example where saving could come is, there is another expense called as let us assume there is a pension which is going to be paid. It says pension of 35,000 needs to be paid till the life of the person. The scenario is you will have to pay him till the life of the person, not for 10 years or 15 years. The assumption is you will pay till the person is alive. In this case, what will happen is, if you tell him to work, you will pay 60,000 and then pension for, let us assume the person is likely to live for another 20 years, just an assumption. You will pay 60,000 and pension only for 19 years. Whereas if you dismiss him now, you will pay pension for 20 years. So by telling a person to work for 1 more year, you will save pension for 1 year. By telling a person to work for 1 more year, you will save pension for 1 year. But redundancy pay cannot be saved. That also with an example that pension would be paid till the life of the person. If the pension is paid for 10 years, you don't save any money. Here you pay 60,000 and then pension for 10 years. There you directly pay pension for 10 years. Another angle which can come is time value of money. Another angle which can be brought in this analysis is time value of money, because the 60,000 and 35,000 are not addable. 35,000 is paid after a year. So the worth of this 35,000 could be 32. Could be 32. That is from a time value of money point of view. We don't bring in time value of money in most of the question. I don't think so any question I will bring time value of money concept, except for one question on customer lifetime value analysis. But otherwise, time value of money concept is not brought in as far as your SCMP is concerned. But practically, that's another angle which, because when I consider time value of money, that 3 lakh revenue also you'll have to consider time value of money, because you'll get that after a year. So that 3 lakh today's worth could be some 2 lakh 70 or 2 lakh 80. So that time value of money angle is kind of ignored in our analysis. But the net what I understand is 60,000 plus 35,000. Other side is 35,000. So net my extra cost is 60,000. Research staff 60,000. Incremental cost. That 35,000 is anyway be paid. Share of general building. How much is relevant here? Share of general building is 0. Share of general building is 0. So total benefits. The most important part is your material cost. 3,25,000. Total costs 1,60,000. Relevant benefit. 325 minus 160. Let me know if there are doubts. Relevant benefit is 1,65,000. You could have made some mistakes, that's perfectly fine. Whatever mistakes you have made, you can correct it. The minus 25,000 can come in the cost side. The relevant benefit will net be again 165. Overall benefits would be 3 lakh. Overall cost would be lesser. Net benefit would be 1,65,000. Whatever way you want to present it. Either you present it as a benefit or you present it as a negative cost item. Clear? Any doubts on this? '23 is homework. 23 is homework. I'll come to 24. These are the type of questions which will come in exams for you. Let's come to 24. The computation part will be fairly simple. The non-financial is where the discussion would be. I'll have to discuss a little bit on the non-financial factors, but the computation part will be fairly simple. When you see this question, you'll understand. ILA runs the planetarium station in New Delhi, India. The strength of the station lies in its live interaction and programs for visitors, students and amateur astronomers. Station is always active with programs for school and college students. One of the station's key attraction is a big screen IMAX theatre, 70 mm motion picture film format which shows images of far greater size and resolution. The IMAX cinema projection standards were developed in Canada in the late 1960s. The film is run horizontally so that the image width is greater than the width of the film. Mostly this para may not be of much use. The average IMAX show at the station attracts 120 visitors at a ticket price of 160 per children and 200 for adults. ILA estimates that the running cost will be 10,000. In addition, fixed costs are allocated to each show based on annual estimate of the number of shows. Hobart School has approached ILA about scheduling an extra show for its class 8 students. 100 students and 5 teachers are expected to join the special show, a feature that is currently showing. The school has asked ILA for a price quote. The special show will take place at 8:30 a.m. when the IMAX is not usually open. Recommend the minimum price. Recommend the minimum price. That minimum price is a simple calculation which will do. That will go through relevant costing. Along with that, some non-financial discussion needs to be done. Non-financial factors discussion needs to be done. Go through the question and tell me how much would you charge for the show. That is purely financial analysis. On top of that, some non-financial factors need to be taken into consideration. But tell me first, how much would you want to charge for the show? Second para has that information. Let me know how much would you want to charge for the show. If you are part of that planetarium station, what is the price you will charge? I'll come to the non-financial discussion in some time. But let me know how much would you want to charge for the show. Yeah, friends, I need some answer. Right, wrong doesn't matter. If you are part of that planetarium station, how much would you charge for this? One answer I've got is 12,000. Can you tell me the calculation for 12,000?
Total ticket price
Okay.
the running cost.
Okay, total ticket price minus the running cost, 12,000. Okay, any other answer? How much?
10,000.
Okay, 10,000, which is the running cost. Okay, any other answer? One is 10,000, one is 12,000. Someone else had an answer. Okay, the ticket prices is I'm going to earn 50 into 160 is 8,000 and 70 into 200 is 14,000. Put together 22,000. I'm really not interested in knowing this because the show is going to run at 8:30 a.m. when the IMAX is not usually open. So because I'm conducting the special show, I'm not going to lose this revenue. I'm not going to lose this revenue because IMAX is not usually open at that point of time. IMAX is not usually open at that point of time. So the revenue which this show brings in is not a number which I'm really interested in knowing. So 22,000 does not matter. It can be even 5 lakh, 10 lakh, any number. What matters is only this 10,000 rupees, which is the running cost, fixed cost again irrelevant. If it was during the normal show, it's not again 10,000, it is entire 22,000. It's entire 22,000. If it was during the normal show, in yes scenario, you incur a running cost of 10,000. In a no scenario, you earn revenue of 22,000 and incur running cost of 10,000. So running cost will anyway be there in the both scenario. Basically, you are losing the revenue of 22,000. It's basically what am I losing? Say it's like that captive consumption example. If it had demand, relevant cost would have been entire 22,000, lost revenue. If it does not have outside demand, at 8:30 a.m. it doesn't have any outside demand, relevant cost is only the running cost, which is 10,000. Relevant cost is only the running cost, which is 10,000. Clear? Any doubts on this? The relevant cost is 10,000. So I am not bothered about 22,000. So you will write some explanation, first you will do relevant cost statement of this. Revenues lost, you will say nil because you are not losing this, because at that time the show is not running. At that point of time, at that time when you are doing the special show, there is no loss for us. Second, running cost is 10,000. Fixed cost is again irrelevant. So the minimum price from a financial point of view is only 10,000. Now there are certain non-financial factors I'll have to take into consideration. First factor is there a possibility of this bringing in future revenues for me? Is there a possibility of this bringing in future revenues? Because this is for some school. So if so many students are going to come and see this, is there a possibility that I earn extra revenues in future because the same people come to the planetarium along with their parents? The same people come to the planetarium along with the parents. Second thing, when a movie show runs, there is some allied revenue which a theatre makes. What is the allied revenue they make?
Popcorn.
Food and beverages. So is there any earning which I am going to get out of the F&B segment? Is there any earning I am likely to get out of the F&B segment, food and beverages? Is there any extra income I am likely to get? Another factor is this special show is going to happen at what time?
8:30.
Which is not the normal time. If I tell my employees to come at that time, are they going to ask for any overtime? Because I am telling them to come at an abnormal time. So is there any extra cost I am likely to incur? Because you are bringing the people at a time which is not the normal time. Also somewhere I think the last part which says is, just a minute. Okay, they are running a special show on the planets and solar system. That's a special show which is going to run. It runs a planetarium station. So somewhere the objective of this planetarium station would be to attract young kids and focus them or motivate them to become an astronomer in future. So somewhere they are telling this show can help in achieving its mission, can help in achieving its mission. That's an indirect point which they are trying to make. See, I am able to tell all this point because I've seen the case study earlier. I'm not telling you exactly you'll have to write the same points because it's impossible. You give me a new case study, I'll write 5 points, you'll write 5 points, 3 will match, 2 will not match. And with ICA solution, maybe 3 matches, 2 matches, 4 matches. It is impossible for us to write the exact point. So I'm not telling you to say that you'll have to write the exact point. The only thing, we are reading more and more case study. The reason for reading more and more case study is you'll understand how to think and come to the solution. Now, if you look at the solution, there are so many points. I'll come to the points in a minute. I have prepared a PPT for every question. This is there in that material which I have given. There is a summary material which would have come to you. Every slide, whatever words are there, it's printed there. Every slide. So just give me a minute. In your summary notes, chapter 5 is page 33. So whatever is there in the PPT will be there here. So now onwards, I'll be just referring the PPT. I'll not refer to this material. You want to parallelly refer, you can keep this material and write extra notes if you want to. That's why you'll have to carry the summary notes. You want to write extra points. Space could also be an issue, but if at all you want to highlight something, you can highlight. So I'm just getting into the PPT. Impact on related revenues. Impact on related revenues. Is it possible that I make any extra revenues out of this show, which is your food and beverages? Any food and beverages revenue. If you are able to earn food and beverages revenue, your minimum price can further come down. Your minimum price can further come down. If from the F&B segment you will make a net profit of 4,000 rupees, the minimum price can come down. Your wish what price you want to charge, but the minimum price can come down if there is an extra benefit. If there are future revenues which are likely to earn, and that you put a price, you can put a price. So all this is subjective in nature. All this is subjective in nature. You can say because of the future revenues, I'll earn extra 5,000 rupees. The minimum price can further come down. The minimum price can further come down. Impact on additional cost like overtime premium. If at all any additional costs I'll have to incur, the running cost of 10,000 can go up. The running cost of 10,000 can go up because there can be additional cost. There can be additional cost like overtime premium, consideration towards educational mission of the planetarium. Now, how you need to prepare for these types of case studies? One time you'll read the entire solution. In class, I may not give you time to read the entire solution. First problem, I'll give you that time, but you'll read the entire solution. Beyond that, there's no point in remembering those exact words or remembering. You will just read this 4 points. You will have to somehow get an idea saying that these were the points in that case study. You want to read it again, you can read it. But during revision, I just expect you to read this 4 lines. That's all. During revision, my expectation is that you will just read this 4 lines, nothing beyond that. Every case study which is there, the summary would kind of take care of the entire case study. Some case studies, maybe some extra points can be there. If you want to read the detailed answer, you can read it. But broadly, using these 4 points, you'll have to expand your answer. Using these 4 points, you'll have to expand your answer. Now, let's look at the solution. The incremental cost associated with IMAX show appears to be 10,000. Cost of running the show. Allocated fixed cost is not relevant because the total amount of fixed cost will not change as a result of the special show. This is just writing extra points in net. It's the same thing. How you write, how you word it, it's up to you. It's not that exactly same wordings are expected in an exam solution. Further, the ticket prices are not relevant because the show will take place at 8:30 a.m. when the IMAX is not usually open. Thus, the students will not be displacing any regular visitor. Based on the financial data provided, minimum quote appears to be 10,000. This will be a 10-mark exam question. I'm repeating, this will be a 10-mark exam question. In that, this financial analysis could be 3-4 marks. And there could be non-financial. Sometimes financial analysis could be 6 marks, non-financial could be 4 marks, depending on the type of the question. Here, the financial segment is very limited. The financial segment is very limited. It's a very simple analysis, 10,000. However, you consider the following extra factors. Does the station have a souvenir shop or a cafeteria? If so, many students are likely to buy food, thereby increasing the station's contribution. In turn, this would reduce the minimum price quote. See, I am not expecting you to write the exact words, but broadly, similar points you'll have to write in exam. Logical points, you write a logical reason for your points, whatever it is. What is the impact on future revenue? After seeing the show, many students may return with their parents, thereby increasing future revenue. Are there costs linked with the special showing not included in the 10,000 variable cost number? Example, will the station have to pay an overtime premium to its employees? It's not only overtime premium, it could be any other cost also. It could be any other cost as well. ILA should also consider the educational mission of the planetarium station. Such shows directly contribute to this mission, the station, and hopefully the betterment of the students. The special show may be an excellent way to expose some students to earth science. These students may have never gone through a planetarium station if it were not for the school excursion. So it's basically writing like more like a story with your logical points. Bring in your logical points and expand the way you want it. It does not matter whether you write your answer in 2 sheets or 1 sheet or 3 sheets or 4 sheets. There are some key points ICI expects. So if those key points are there in the solution, you'll get an good marks. Obvious expectation is if similar points are there, you'll get full marks. But again, I'm repeating, same question doesn't get repeated in exam most of the times. What will happen is there could be some other case study where some points from this can be written there. Some points from this place could be written in some other case study where you will say impact on future revenue, impact on your F&B segment. It could be not a movie station, it could be something else where you see there is an impact likely of additional revenue, allied revenue. Your mind should start thinking on, because I'm doing this, is there an impact on allied revenues? Is there an impact on future revenue? Is there an impact on extra cost? Is there an impact, does it contribute to my mission? So like this related points you'll have to bring in. Overall, the best price to charge is unclear, requires some judgment, as ILA needs to balance an array of financial and non-financial factor. I will not give a conclusion saying how much you have to charge. I can say from the financial point of view how much you have to charge, which is given in the question. Based on the financial data, the minimum price is 10,000. That you will have to answer. But before, you also consider extra non-financial factor. You should consider extra non-financial factor which are being explained here. Now in class, I will not have exactly the time for you to write the non-financial factors and all. So questions like this, even the financial analysis, I'm not telling you to write because there's nothing much there. There's nothing much there. That's one reason of giving the printed solution. But I don't expect you to read this again. I don't expect you to read this again. If you want, you can read it. But the summary notes should take care of what is there in this. The summary notes should take care. If you want, you can read it like we read a newspaper. That's nothing needs to go into your memory. This is not for the purpose of memory. It's just understanding the core crux and getting a flavor of how to write. That's all. That's the reason you may read this. But it's not that I expect you to exactly buy at this thing. There are certain things where I'll tell you you'll have to remember. For example, rule the issues with relevant costing approach. Those 2-3 points you'll have to remember. Those 2-3 points. This you cannot write it in any other case study. If it's related, you can write. But it's not that you will end up writing this in any other case study. So some standard points will be there, which I'll tell you whenever there are standard points. I'll let you know that these are the standard points. You can write it in any case study. Just one more minute. I'll just give one more point and then we end the session. There's something called as a concept tracker. I would be giving it to you. In the previous batch I used to do it in the class, but I'll not do it in the class. I'll give it to you. A concept tracker will basically tell the concepts of that specific chapter. For example, relevant cost, in the previous batch I said these are the core concepts. Relevant cost of material, it was in question number 30. I'll give you the reference to the question number and all, which question number you'll have to revise. There in the previous batch it was in question number 30. This batch I don't know what question it is. Relevant cost of labor, relevant cost of captive usage, relevant cost of overheads, additional factors for a special order, maybe this question it could be, relevant cost of usage of machine, reasons of non-usage of relevant costing over longer term. Those 2-3 points which I was saying, that why you don't want to use relevant costing, negative relevant cost of material, I think the research cost which we saw, additional factors for a special export order. So there's a special export order, what additional factors. So these are the core concepts I want you to revise the day before exam, or I want you to revise. So I'll give you this separately. I'll not dictate in the class. I'll give you this separately. You can, best thing is write it, Printing is a choice I wouldn't want to give you. So every class or every 2-3 classes I'll keep updating it in the drive. So you download it from the PDF, just write it in this format: serial number, concept, topic, chapter number and question number, so that when you want to revise, you can just go to question number, for example here I would have wanted the student to go to question 30 or the chart, 31 on the chart, 33 on the chart, 44 on the chart, 43, 37, 38, 39, and look at that concept and be done with it. That was my expectation from the students for revising the day before exam. So this would be given to you later. Clear? With this I'll end today's session. If there are doubts I can take it up.